Later CPA and Associates, accounting the grapevine mates.
Hi there, I'm Daniel Lader, founder of Lader CPA and Associates, and welcome back to our ongoing series, Tax Strategy, right here, right now, where we are talking about great ways to reduce your tax bill and skipping all the jargon. So this week, we're going to be talking about accelerated depreciation for equipment and for office purchases. Now that might sound technical, but the idea is simple. When your practice buys equipment or furniture or certain office improvements, you deduct that cost over time. Accelerating that depreciation may let you deduct more of that cost sooner. That can lower your taxable income, but it does not make purchases free. So, the first simple rule: do not buy something just for a tax deduction. Buy it because it helps your practice. Now, why does this matter? For a mental health practice, this can apply to a few things: computers, desks and chairs, therapy room furniture, office equipment, security systems, and certain office improvements that you put in place. Now, if your practice is having a strong income year, faster deductions may help to reduce the tax impact. But if your practice is having a low income year, it might be better to save some of those deductions for later. Now, that is why depreciation is not just a tax rule, it's a planning tool. So, the main idea: there's three basic ways to think about depreciation. First is your regular depreciation. That means you are deducting the cost of things slowly over time, over years. This is the normal method. It's not exciting, but it still can be useful. Now, sometimes spreading that depreciation into future years is better than using them right away. The second method, Section 179. Now, this allows businesses to deduct more of that cost right away. This can be helpful when the practice has really strong profits and needs the deductions now. But there's limits. It does not work perfectly in every situation. That's why it should be reviewed with a tax professional before you make a big purchase. The third method is bonus depreciation. Bonus depreciation is another rule that may allow you to make larger first-year deductions. It can be useful, but not every purchase can qualify for it. The item has to meet the rules, and the timing of it matters. Now, again, this is where a professional's advice is going to come in handy. A concept we have to talk about when it comes to depreciation is the phrase placed in service. This means when the item is ready and available for the business to use. It's not always the same as the date you picked and paid for it. For example, a computer is placed in service when it's set up and ready to use. A desk is placed in service when it's in the office and ready for work. A security system is placed in service when it's installed and turned on. This matters a lot near year end. Buying something in December does not always mean you get the deduction in December. It usually needs to be ready for use in the business. Now, an important concept I want to touch on: the difference between equipment and office improvements. Equipment is usually easy to understand. It may include computers, furniture, printers, office tools, but office improvements are more complicated. They can include flooring, lighting, built-in amenities, HVACs, or maybe a large office build-out or remodel. Some of these improvements can qualify for faster depreciation, but others may need to be deducted over a longer time. Now, that is why larger office projects should be reviewed carefully. Do not assume every office cost is treated the same. They are not. So a couple common mistakes to go over. The first mistake is thinking that every purchase is deductible right away. They are not always. Some items can be supplies, some can be repairs, but some can be equipment and building improvements. And these are all treated and deducted differently. Second mistake is buying something only to be written off or only to claim a write-off. A deduction can lower your taxes, but it still costs money. Your cash flow, that matters. The third mistake is asking about depreciation after the year is over. By then, a lot of the choices may have already been made and made for you. It's better to plan about your purchases before, especially on larger items. Now, let me give you a simple example. Let's say that your practice buys new computers, office furniture, and therapy room furniture. Those purchases may qualify for a faster depreciation deduction. But the best answer depends on the full picture. Is this a high income year? Is your cash flow good and strong? Will all these items be used right away? Would the deduction help more this year or in a future year? That is why the answer is not always deduct as much as possible right now. The better answer is use the deduction when it helps the most. A couple closing thoughts for you. Accelerated depreciation can be a helpful strategy. It can help practice owners deduct equipment and certain office costs faster, but it should be used with care. The goal is not to spend money just to lower taxes. The goal is to make smart purchases, protect your cash flow, and use the tax rules in the best way. Let me leave you with a critical thinking question. Before making a large equipment or office purchase, ask yourself, is this purchase helping my practice grow or serve clients better? Or am I only buying it because I want a tax deduction? Next week, we are going to be talking about hiring your kids and the wage strategy and the documentation required. So don't forget to like, follow, and subscribe for future events and tax advice. Visit our website, latercpa.com. Have a great weekend. Keep helping others to help themselves, and let us help you to do just that. I'll see you next time. Bye.